Hey guys, easy strategy time. Today we're scalping gold. It's about a 70% win rate and it's pretty easy. 5-minute fair value gaps, sweep of daily ranges. There's a couple of confluences that help us stay out of trades, but it's fairly straightforward. So let's get into it. Okay guys, scalping gold. So I've just recently started trading gold and I'm actually having trouble with it on the higher time frame. I'm finding it quite erratic. It will have a big bullish move for a couple of hours and it will just try to reverse. And so I started to find a lot more success just scalping it. And I got to the point where I was like, wow, this is almost the best strategy I have because it was just making so much R. So let's go into it. First, I turn on my DR, IDR. I always do this. People ask me, why do I use this even though I'm not trading traditional DR? I like the timing aspect of it because now I know that, okay, this is your Asian high, this is your Asian low, and I just kind of framed it for you. So if you want to use this indicator, go to here, right, DR, and it's DR IDR V1 by the master. Pick that. Then we got the Lux Algo fair value gaps. So again, if you want this one, just write in fair value FEG, and there it's this one, Lux Algo, 13,000, whatever. Okay, so what we want to do is you want to see one of these, either the high or the low, get swept. So this zone ends at say 825, and so we wait, and that's swept out. Okay, so we're on the 5-minute. The issue with this high is that we don't really have a target. Let's have a look. I'm waiting for that to get swept. Okay, so we want to see a fair value gap on the 5-minute inverted. So you want to see that disappear. And in its place, you want to see the opposite fair value gap appear in its place. So this was a bullish fair value gap, got inverted, and now we are printing a bearish fair value gap to the opposite side. And so you wait for that, and then you put your stop above this, okay? Now, what are our targets? Our targets are untapped fair value gaps, so they can't be traded to. So we see here, this has not been traded to, this hasn't been traded to, so that is your target. Right, that's it. You can look on the high time frame too, so you look at the 15-minute. Okay, you can see that has been traded to. Look on the 30-minute. Okay, nothing there. So 5-minute to me is really the best. If the 15-minute or the 30-minute or the hour haven't been traded to as well, then you can possibly trail to those deeper levels. But right now, that would be the trade I'd be looking at, this 5-minute untapped down here. And so what's the logic behind this? It's the fact that we've swept out liquidity, which in this case is the Asian highs. And after you've swept out liquidity, you need to rebalance. And so the market is going to find these untapped fair value gaps and it's going to target those. So let's see what happens here. Bang. Target hit. Okay. So you're in this trade for 30 minutes. Half an hour trade, money in the bank. Okay. And what's great about this strategy too is that you don't need a bias. You don't need to sit there looking at the 4-hour, looking at the daily, looking at your RSIs, your EMAs, and just getting yourself into this confusing state where you don't know what's what anymore. This one is just look at the chart, bang, lowest hanging fruit, bang, happy days, walk away with the money in the bank. And this strategy is great for prop firm challenges. When you just go and buy a prop, go 1% risk, and you do this strategy every time you see it on gold, and you'll pass the strategy. The strategy will pass you a prop firm every month, really. And if it doesn't, and you lose it, get a new one because you probably will get it again. The win rate here is so high. I mean, some months it's up to 80%, 90%. Bad months you might be looking at a 50 or 60%, and in that case you might be kind of having a break-even month. But if you're doing this over multiple instruments, because this also works great on NQ, then you can just kind of rest easy. And so again, with this trade here, what's great is that we also have, we have a fair value gap right here. It's not amazing. It's not a giant fair value gap, So what I do, if it's really small like this, I'll drill down to the 3 minute and have a look what we've got. There's nothing there either. But it rejected it anyway. Okay. Let's see if we can get one in the opposite direction. Okay, we do. There we go. Inverted it. Fair value gap. Again, this is not the best trade. These fair value gaps are quite small, but this is just for example. So this 5 minute fair value gap, untapped. Now, it's only a 0.8R return, which is not ideal. So we'll go to the 15 minute, and what do we see? Okay, it's been tapped too. So 30 minutes, have a look, 30 minute. Okay, there's a 30 minute untapped right here, 30 minute. So what I'll do here is that because this is untapped, when it hits this mark, I'll go break even. But I do want to go for that bigger target. So we'll go in. Do we get BE? Not yet. Not yet. Bang. There we go. Another trade. It's the exact same setup. I almost got BE'd. I went BE here, and then we rolled down, just missed it, and we rolled to target. Okay, so there is one confluence that I use to stay out of trades, okay? And I want to show you that now. What you need to do is, you go to Lux Algo Smart Money Concepts. All right, so just go Lux, just write Smart Money. Smart Money Concepts, Lux Algo. Turn that on. So this will give you your order blocks, your bearish order blocks, your bullish order blocks, whatever. Okay, so we swept the lows of London, and now we're looking for a trade to the opposite direction. All right, so here we have, this is our fair value gap. And so we would wait. We wait, still we wait. We can get rid of this now, we set that up. Okay, that's our confirmation. So we would go here, we put it underneath, say the candle that created it, which was actually here. So we'll put it there, and we could get, say, 0.7. We'll go for this untapped here. But I am not taking this trade, okay? And here's why. So we have the bearish order block right here. You get your fib, okay? So your fib retracement here. Go from the top to the current low. So this is your swing high. This is where your swing low is. Price is in the golden pocket here between 0.618 and 786. So I will not be taking this trade because we are in bearish order flow. Okay, see high, lower low, lower high, lower low, lower high, lower low. So this is bearish movement down here. And so really, I mean, price should just be doing this, right? Coming in. If you look up here, what's price doing, right? It's rebalancing, it's rebalancing, it's rebalancing, it's moving down, it's rebalancing. It could just be doing the exact same thing, okay? So I wouldn't be taking this trade. If you wanted to take this trade, you'd have to wait for it to come lower. So there's a higher chance that we get stopped out on this trade, because even if price does eventually want to run it and go higher, there's a good chance that people are going to be shorting here because they're in bearish order flow. They're going to follow the trend until the end. What do they say? The trend is your friend till the end. So there's a good chance that there's going to be a reaction here. And what happens? This fair value gap basically gets cut up. Right, that's it. You're out. You're out of the trade. You would have lost this trade. So even if price does go up eventually, We don't care. We're scalping here. We don't really care what price does in an hour. We care what price is going to do right now. And with scalping, you really want to be in a move. Right? You don't want to be waiting for retracements. You don't want to be cut up, chopped up. Scalping is you're in a trade and you're moving. And that's it. And that's why if price is already here, you don't want to be in the trade. Okay. The difference is if we, for some reason, say we got in a trade down here, I mean, not that this happened, but say there was a fair value gap shift all the way down here, right? Then potentially you could have been targeting this 5 minute. Say we chopped up a little lower and say price came down, down here somewhere, and you were in down here and you had this 5 minute up here. That's fine, right? Because you're under 0.5, you're in discount. And so when price does come up, bang, this would have been what you would have hit and you would have been out for profit. But the moment it gets into this golden pocket, your risk goes up. And that's why stay out of those trades. So 1, turn on DR, IDR, wait for sweep of high or low, okay? That's it. 2, turn on FVGs. 3, wait for a 5 minute inversion. 4, wait for a 5 minute FVG in the opposite direction. 5, enter. Stops above the FVG candle, but only, probably should have made that number 6, but you're looking for a 5 minute or say 15 minute untapped FVG. Go for 1R. That's it. When do you take rules? Rules. The rule is turn on SMC, run a fib from OB to current swing high low, swing high low. Okay. If price is already in the golden pocket, which is your 0.618 and your 0.786, no trade. That's it, guys. So don't go using money on this yet. I would say go back test it. Do January, February, March, April, May, June of this year. Do the first 6 months and have a look at your results. And I think you'll be surprised. I mean, there's not many losing streaks. I think the highest I had was 3 losing streaks. But there were some times where I think won like 10 in a row in certain times. And yeah, it's 1R targets. It's 1.5, 2R. You're not making big targets. But these add up, okay? So go back test it and tell me how it goes. Right, cheers guys. See you next time.